Hi, ladies and gentlemen. Welcome to The Scoop. I'm your host, Frank Chaparro, editor-at-large at The Block. And today we have a very exciting episode for you folks. Hopefully, it is the first of many recordings between myself, The Block Research's Larry Cermak, and our friends over at eGirl Capital. Today we have Hog. In future, we might be joined by other luminaries of that organization. The focus of the episode is going to be on markets, what we're seeing shaping crypto, and of course our two friends, or rather just Hog. I think, Larry, you ended up skipping out on the Singapore conference, but Hog was there, and so we'll talk a little bit about that. But before we dive into it and bother Larry and Hog about the market, I want to take a moment to thank our sponsors. Get ready for Season 3 of the Tron Grand Hackathon 2022 with a total of $1.2 million in prizes across Web3, DeFi, GameFi, NFTs, and the newly added Academy and Ecosystem tracks. The wait is over. Tron Grand Hackathon presented by TronDAO. To learn more, visit trondao.org. This episode is also brought to you by Ledn. From Bitcoin and USDC savings accounts to Bitcoin-backed loans, Ledn's financial services enable you to benefit from your holdings today without selling your Bitcoin. Learn more about Ledn at ledn.io. Ledn, where your digital assets come to life. All opinions expressed by hosts and podcast guests are solely their own opinions and not necessarily those of the blocks. Podcast guests may have taken positions in the assets or other matters discussed in this podcast. This podcast is for informational purposes only and should not be relied upon as a basis for investment decisions. For full terms, visit theblock.co/terms-service. Larry, thanks for coming on the show with Hog. Obviously, I have to bust your chops a little bit for rugging him on Singapore. I'm pretty sure you're supposed to go. You're probably just having a good old time at home.
Yeah, I end up bragging. To my defense, I have a 4-month-old baby now, so that's a good excuse for everything.
All right, we'll allow it. Hog, how was the conference? Did you learn anything new?
I thought it was good. Yeah, a lot of people there. I obviously didn't go to the conference. I just went to all the side events. Yeah, but it was good. Like it really felt like all of Asia came and people from other parts of the world. I feel like Singapore is like one of those countries where if you live there every day, it kind of gets boring. But then if you pop in like for a week every year, it's like, oh wow, this place is like so convenient. You know, you can get to everywhere in a few minutes. And they also timed it with F1, so it's pretty good.
Yeah, I wonder if there's a bit of conference fatigue that is now hanging over the space. It seems like every week there's a new conference, and each blockchain now has their own conference and summit. Is it productive at this point?
I think like ever since COVID, it kind of became like, hey, like you actually meet in person. Like all of us, you know, I haven't seen you, Frank, in probably like a year or something. And we talk every day, but like actually meeting up in person, you know, going to dinners, going to a party or just chatting, like it's a bit different. And I think like ever since that happened, especially kicked off last year at the Miami conference or 2 years ago, it kind of feels like the conferences are almost like to decompress and just meet people in person, those that you work with, but also those that you just chat to online all the time. And so I feel like from that perspective, it's always helpful because a lot of people that you already know are in the same spot and, you know, you can actually, you know, catch up with all of them. In terms of like actually networking and all that, I feel like if you go, you know, to conferences in different places, like different continents, let's say, sometimes it is helpful because not exactly like Hawk said, like a lot of people from Asia that you normally wouldn't necessarily like speak to in the US conferences, like they actually make it there as well. So there's some overlap, but there's also some new people. So it could be helpful. But for me, mostly it's about just like, you know, seeing the people that I haven't seen in a long time and meeting the people that I've maybe only met online and then chatting with them in person is always nice.
So what does it mean for maybe deal flow? Are these conferences an opportunity for you to meet potential founders of companies you'd want to invest in, To what degree does that type of stuff happen?
I think you find the odd one or two, definitely. It like Larry said, it's a good time to just catch up, grab a drink with someone. But yeah, I think we found like one or two, not necessarily like crypto teams, but kind of on the borderline of Web3. There were some cool people that we met for sure. But I think if you're out there aggressively looking for deal flow, you're going to be really disappointed. But that's not just at this conference. I think that's at conferences in general.
Right.
I've been to three this year: Barcelona, NFT NYC, and then this one. And yeah, I think at all three, if you are like aggressively looking for the new cool thing to invest in, you'd be seriously disappointed.
How do you think how do you think the projects change and how their pitch has changed over the last few months? Like I feel like from the limited amount of deals that I see that I come across, it's like everyone's valuations drop like 80%, first of all. And secondly, like, the pitch is very different. Like back then it was like, hey, we'll do a token in 3 months. And there'll be a product market fit immediately. There are going to be a lot of users. Now it seems more like, hey, we're going to spend this, next 2 years in this bear market just building, and then at some point, like, this could be a really good deal for all you guys. Is that something that you're seeing as well, or like how has it changed over the last 6 months?
Yeah, I see the same too. You get a lot of teams talking about runway now. I think runway was not a popular word before, 3 months ago. But in saying that, I feel like the amounts raised haven't dropped off that much, because teams know that there are funds out there that need to deploy, and they always talk about runway because they're like, this 2 years we need 4 mil to get through these 2 years. So I still feel like they're kind of targeting similar amounts of money, but the valuations have definitely dropped. So now it'd be 4 mil at 20 instead of say 4 mil at 40. So that's kind of what I'm seeing.
And do you think anything has changed in terms of products and like what they're going for? Like I anecdotally have seen like more data companies, so kind of like the more long-term oriented companies. Yep. Versus not that many token startups.
Yeah, seeing a lot of equity only deals, a lot of like infrastructure stuff. Yeah, a lot of more grounded stuff, I'd say. Yeah.
I mean, in terms of like what this meltdown means for consumers of not just protocols and projects, but companies like Celsius or to an extent BlockFi, although they didn't technically lock out customers from accessing their funds. And of course, the folks that invested in many of these actual projects that blew up, like Terra Luna. Does this put a black on the space that keeps new blood, as it were, from pouring back in? I mean, how can anyone ever trust crypto again?
Frank, we were saying the same shit 2017, 2018. We're like, oh, we'll never see this mania again. Like, these people will never be back, and then we're back now, and everything has gone even crazier, right? Like, you have more people, you have valuations were even higher than I remember seeing 2017, 2018. And the prices are now down for a lot of the tokens, like 90% plus, right? Like, it's no joke. Like, shit has really gone down, and I think like we will see a few manias again. You're right that it's not super like long-term sustainable, but I do think that at some point, like, people just start chasing the really big returns. Like that's what you see every single cycle is like, oh, hey, this fund got, a 1000x on Axie Infinity. Maybe I should go fund the second Axie Infinity. And I always see that every single time. And a lot of companies just end up raising on these like comparative valuations. And I don't think that's really going to change. And it's going to kind of just keeps going up and up because there's just so much demand to invest, and all the VCs are chasing the marked up valuations for their funds, and so it's kind of a self-fulfilling prophecy. I think it will happen a few times in the future again.
I think the next one might be like 5 years away, and I think we might just get one or two more, because in my opinion, like you get, let's say 5 years, 10 years, like this industry has to be close to like starting to mature, right? By then, I don't think you can get like the same super speculative bets after two more cycles.
Yeah, I think I agree. Hog, what do you think are the most interesting ecosystems right now? Are you still seeing some like pretty good projects coming out of like, obviously there's not so many, right? There's like a Solana, Avalanche, ZK Sync projects, Starknet, then you have Aptos, Sui, and all of these. Like, are you seeing any interesting activity in any of these ecosystems?
I want to say I'm the worst person to ask for this because I'm not. Yeah, like I'm not really a pure VC. Like VCs are way more bullish than I am, and I think no. Like even with Starknet, like it's been delayed, right? And we're hearing talks of teams and devs like jumping chain, and I think as long as that continues, that to me still thinks like still reeks of teams being mercenary. And I think as long as that keeps continuing, for us, we don't see anything super exciting. Yeah, we kind of want to see commitment, and it's like the beginning of the bear market right now, and we haven't really seen teams committed. They still think they can take a chance by jumping onto the next hot chain, which is say Aptos, right?
So, Hog, what advice might you have for those unfortunate souls who have found themselves gripped in their first bear market? What would you tell them to maybe stay the course or stay sane?
I think it's about patience. Really, it's about patience. It's okay to do nothing. But there are like some cliches. Obviously, don't try and time the bottom. Don't try and use too much leverage. I would say don't even try to use leverage at all. We've seen instances even in like March 2020 where if you use like a little bit of leverage and or your collateral was denominated in crypto, you were very close to getting wiped out, right? So, these are very volatile times where liquidity has also disappeared. And it's okay to, just buy spot and ride it out. You don't have to be taking massive positions on leverage. Yeah. A lot of these like downturns, there is that one day where everyone goes, oh fuck, and calls up their friends to see if they're all right. You don't want to be that guy who's not all right on that day. That's all it is.
Yeah, I think that's right. What I would add to that is like, yeah, exactly. You actually don't have to do anything. You can just kind of stay in spot for some time, be patient. But it's also like staying informed with what the market, what's happening to the market, right? Like a lot of people just like they stay patient, but they actually stop paying attention day to day, and I think that's a mistake. Where like, those people that actually stay engaged and those people that don't leave, Twitter and don't leave, like basically don't say fuck crypto and leave, are in the best position for the next cycle, and they're also the ones that will be able to the most accurately kind of predict when activity starts picking up again. Just like it was the same thing with DeFi last year, not last year, like 3 years ago with the new cycle. Like it was kind of obvious to a lot of people that stayed around, but for a lot of people it was also a surprise because they didn't expect it to happen in that way. So I think like just staying informed in that market and not losing the patience and just leaving or not doing anything, I think is important as well.
Yeah, no, that's completely true. Like anecdotally, I take a holiday for like a week and a half. I come back and so much has happened, right? And if that can happen in a week and a half, if you're gone for 3 to 6 months, like you've missed a lot. But yeah, you're right. Like just keeping your ear to the ground, keeping informed is really valuable. But you don't have to buy anything, right? You just have to be on top of things.
Yeah, it's just like just being patient for now. And
Yeah,
like,
exactly.
yeah, I think the only way that you do well is like either you're patient and then somehow time the reversal at some point, which like Hawk said is almost impossible. Like no one ever guesses that perfectly. But like just like buying slowly and not buying in large amounts, I think is generally a pretty good thing to do. Is just like just average in a little bit. Like as long as you have long term conviction that prices will be higher at some point in the future, like you can just do that and be relatively safe. But just like using leverage in this market, like Hawk said, like the liquidity is so much lower than it was like 5 or 6 months ago, and we see that even with these exploits that are happening now. Like some of them are taking advantage of that. Where if liquidity dries up, like it's just easy to move price around with like relatively small amount of money. And that's really, really dangerous if people are touching leverage, or even if they're in like risky DeFi protocols. Like I'm not really keeping my money in DeFi protocols at these times, because I think it's one of the riskiest times, and we have seen that over the last 2-3 months. It's just the risk keeps increasing the lower the market goes, and the more bored people get. And when there's less opportunity for other things like even MEV and stuff like that, like you can really bet that there will be more people trying to exploit things and kind of like tinker around, because there's just not that many opportunities anywhere else. So that will keep happening for sure.
We've seen obviously a lot of hacks recently. Do you think a lot of teams out there are having sleepless nights over that?
Yeah, I like there are definitely quite a few teams, especially those in DeFi, that are, going back and checking everything. But I think like we keep seeing these things happen periodically, and to me that also means that there are a lot of teams just chilling, I think. And even I think with the Mango thing, that was spotted like months ago. Like I remember, I think I saw like a Discord log where it was brought up like months ago. So yes and no, there are definitely teams that are like not sleeping at night, but there are also teams that are just asleep at the wheel. So yeah, it's probably a mix of both.
So how many of these hacks do you think are actually inside jobs?
I think honestly a decent amount. I don't think the Mango one was, and I don't think the like super high amount ones are, but I think some of them definitely are, and there are some like very clear indications of that. Like if it's a small amount, and then they come out a few days later and say, hey, no one was actually harmed because we covered everything from the treasury that we had. Like that's really sus overall. Like because ultimately, a lot of these teams, I think there are now two ways how the teams with larger treasuries and really like badly performing tokens can almost like rock. One is this way, or like you either fake a hack or do some inside job, and then you cover it from the treasury and say, hell, no one actually got harmed. We don't know where the money is, but no one actually got harmed. Everything is okay. The second option is, I think that one is like a little bit more creative, and I feel like kind of unnoticed for a lot of these projects, but it's just that you pay yourself such a high salary from the treasury itself. So like you have like 5 or 10 team members, and everyone's getting paid, 3 to 500K on average.
You're talking about Temple here?
Temple is one example, but there are more examples, right? Like Temple is just one, but like ultimately, is that actually a crime, right? Like if you just if I think my work is worth 500K, who can actually say it's not? Like maybe objectively it isn't, but like it's a pretty smart way to just continue draining the treasury. And the project technically hasn't done anything illegal. So I think and I think this will continue happening, where like a lot of teams just expected the token price to go up, and all of a sudden it's down more than they thought is possible. They made no money and they're getting desperate, and a lot of them will just take advantage of these like really lax DAO governance methods.
Yeah, absolutely. I think DAOs in particular are super susceptible to this. Yeah, there's a few off the top of my mind.
I mean, for some project, like you look at like something like Temple DAO, like ultimately, like what can you even do? I mean, it's a project that's not really sustainably designed. Like there isn't really anything interesting about them. So like, what do? I mean, you're not just going to close down with a massive treasury like that and distribute it to the token holders, right? Like because ultimately you would make almost no money. So if those people, most of them being anonymous and like have really not a huge reputation risk, it sort of makes sense, honestly, from that perspective. It is really fucked up, but they're kind of forced in a corner because they just don't have anything that they can do with it. Similar with like Olympus and designs like that, where it's just not useful in a bear market that could last for a couple of years. And I think the more legitimate projects, like they should just really like make sure that they're run sustainably, make sure that their expenses are reasonably down. Like you don't need to pay developers 400, 500K anymore in this market. You can actually pay out more sustainable salaries, and you have to make sure that you can survive if this takes 2 or 3 years. And I think that's what the more legitimate projects should be doing. And then, as we've seen in the last cycle, like the projects that actually ended up building during the bear market, and those that really managed their treasury well and were well positioned, most of them have done quite well actually in 2020, 2021. So it's just about surviving and then being ready for when the next speculatory wave will come. And then that sounds easier said than done, but they just have to get more conservative and kind of accept the reality a little bit. You don't need to fly to every event. You don't need to host crazy parties if you're a pre-product, like all that.
Get ready for Season 3 of the Tron Grand Hackathon 2022. There are a total of $1.2 million in prizes up for grabs in Web3, DeFi, GameFi, NFTs, and the newly added Academy and Ecosystem tracks. So what are you waiting for? Join Tron for an opportunity to showcase your work, win funding for your project, and network with other builders in the community. Tron Grand Hackathon, presented by TronDAO. To learn more, visit trondao.org. I also want to give a shout out to Ledn. Ledn, Bitcoin-backed loans and savings by Bitcoiners for Bitcoiners. As we've seen, not all digital asset lenders are created equal. Ledn prioritizes safeguarding clients' assets with its robust risk management approach. That is why Ledn doesn't actively trade or invest in DeFi yield generation strategies with its clients' assets, and only supports Bitcoin and USDC, two of the highest quality and most liquid assets in the industry. Ledn is also dedicated to transparency, which is why they are the first digital asset lending company to complete a proof of reserves attestation. Learn more about Ledn at ledn.io. Ledn, where your digital assets come to life. I also want to give a shout out to our sponsor, Athletic Greens. Recommended by professional athletes with one delicious scoop of AG1, you're absorbing 75 high-quality vitamins, minerals, and probiotics. It helps me start my day. I mean, I'm on the road a lot, reporting on a 24-hour market, so I need some sort of boost to keep me energized throughout the day. Who knows when a story is going to drop on my desk? Anyway, tons of people take multivitamin supplements, and I've realized it's important to choose one with high-quality ingredients that your body will actually absorb. As someone who's tried a bunch of different multivitamins and has still felt tired and run down, Athletic Greens has made a huge difference for me. But anyway, to make it easy, Athletic Greens is going to give you a free 1-year supply of immune-supporting vitamin D and 5 free travel packs with your first purchase. All you have to do is visit athleticgreens.com/scoop. Again, that's athleticgreens.com/scoop to take ownership over your health and pick up the ultimate daily nutritional insurance. I mean, aside from me, and I'm probably the biggest winner, but who are the other big winners of this bull market?
Yeah, look, I think it's really any firm that didn't get wrecked came out a winner. And I have to specify that because Wintermute got wrecked, right? And they would be one of the biggest winners. They probably still are, but you suffer one of those, and that's wiped out so much of the cycle. But I think like the other winner are DAOs. Like these DAOs that have a lot of treasury, they're the big winners because it's really easy it's really hard to get the money back out of them, right? Once you've got the money, it's so hard to get it back. And I think they're probably one of the biggest winners, like the Temple team, all of those guys, all of these DAOs that didn't get wrecked and are sitting on a stupid amount of money, those are the biggest winners. And like in saying that as well, like a lot of these NFT teams as well, those ones that are sitting on massive treasuries, they're also huge winners.
Yeah, that's a good point.
Yeah. At the end of the day, like Larry's right, like you don't have to pay devs these huge salaries anymore. BDs as well. BDs were getting paid massive salaries. And all of these costs can come down, but you've already got the money in hand.
So Larry, when you maybe think about, we're not at the end of the year yet, but your predictions for 2023, I think you guys on the research team used to put out a end of year series where you kind of predict trends that might shape the market in the upcoming year. Last year, I think it was layer 2s becoming a bigger deal. What do you expect for next year? I'm not sure if you're going to still do that same exercise, but if you were, What would you say and what would you write?
Yeah, we will. But, I think, I was wrong on a lot of these things. Like I said that layer twos will have a really like defining year, and to some extent, they have, like Optimism and Arbitrum have done decently well. Like Arbitrum and Optimism now have, I think I saw somewhere a few days ago, like same amount of transactions and something like Avalanche. So they've done reasonably well, but they haven't done as well as I thought they would last year. Starknet still hasn't launched, which I thought would launch by like Q2, end of Q2, basically this year. And then, now they're still like in this like somewhat launch state, but no one really wants to deploy because there's still this like Regenesis event. ZK Sync still hasn't deployed on mainnet. I think that's happening soon as well. But like ultimately, we haven't seen that like 10x moment that I thought would happen. And part of it is also because the market just isn't good. So like, if you increase the black space by 10x or even 100x, which I think will happen over the next few years, you don't have enough demand to fill it. Like it doesn't really make a difference. Like you still have to actually focus on building those layer twos and building everything to be ready for the next demand wave. And I think the new narratives are going to be, it's just going to be really difficult to establish. Like the only two exciting things that have happened over the last few months is the merge. So just like more focus on proof of stake. Institutions are being more inclined to invest because of some of the ESG stances. And then the second one is just the soon to be deployed layer twos. Like I think they will still make a big impact, but because there's not enough demand, it's not going to be as big as I would have thought. And for next year, I think it's going to be very much like 2019. It's just like everyone will have to just quietly build and just optimize everything, and then get ready for the next cycle where it's going to be much more demand will be able to be absorbed, and hopefully more sustainable models will kind of come out of that.
Hog, what trends are you seeing?
What trends? I'm seeing like more C DeFi, more like DeFi that like requires KYC, or DeFi that requires you to dox some of your positions, how much leverage you have. So yeah, it's a bit of a C DeFi mix.
Do you think that's a derivative or a result of the credit crisis that we've just come out of this past summer? People don't want to necessarily trust the centralized lenders because they may or may not be exposed or overly exposed to certain gentlemen who might have bought certain yachts, who might be living in a certain place that rhymes with Shumai.
I think that's DeFi's answer to under-collateralized borrowing. Over-collateralized borrowing has not changed at all, but this is the current solution to under-collateralized, or even uncollateralized borrowing. That's the current solution.
What do you think has changed in the market dynamics? Obviously, you also trade quite a lot. What do you think has changed overall since the 3AC and Luna collapse? Like, are you seeing any noticeable differences outside of just less credit and less liquidity?
No, I think it's everything just comes down to those two things. Less credit leads to less liquidity, and less volume. Stuff like basis trading is still doing quite well. You can still borrow tokens off certain lenders and then just put on a straight basis trade. So that part of the market hasn't really changed. The yields there are still quite good. But like we used to trade like all these L1 tokens like AVAX and Solana, but stuff like that is really untradeable for us at the moment. Being directional traders, we almost really just have to stick to ETH and BTC, with the odd like Wobby token that pumps randomly. Then the risk reward makes sense, but it's really a wasteland out there for us at the moment.
That's going to be the quote we pull out. It's a wasteland.
Yeah, what also has changed is we noticed like a lower beta from crypto to equities. That I think has been a market dynamic change. And then for us,
have you noticed crypto traders, especially those we might find on crypto Twitter, moving into opportunities in equities or FX. I'm thinking of one gentleman in particular who tweets more about sports betting and U.S. stocks than he does crypto these days, and that's Mr. Gainsey. Are you finding more people in the Gainsey camp as a result of the lack of juicy volatility in crypto right now and that sideways action, as it were?
Yeah, I mean, look, we're doing the same. The way we trade crypto is we can apply that to almost any asset, uh, depending on what sort of time frame we're looking at. So, we are also trading more of equities and FX as well. That's just a function of the market. I think if you're a pure technicals trader, that is definitely the move to go. Why cop less volatility in crypto with lower liquidity when there are other assets to trade? The bottleneck is really how quickly can you off ramp all your crypto into fiat to do this trade. I think that's the bottleneck. But if you can figure that out, yeah, that should be the move. Anyone who is like still sitting there looking at crypto every single day, I think is doing it wrong.
What about you, Larry? Are you still punting options on your Robinhood account? I remember that was the activity du jour for you back during the heady days of the high golden age of the pandemic, post-pandemic retail trading age.
No, it was just like it's exactly what Hawk said. Like when crypto gets less exciting, you need to pinch your gambling. You just need some adrenaline, and then that was, I think, my way to kind of.
Isn't that crazy though when you think about it? How at one point the market was so crazy that meme stocks and just U.S. equities to an extent in general were as high flying as crypto.
Yeah, I mean, it was
that liquidity tailwind.
Yeah,
was powerful.
I think even now it's like exactly like Hawk said. Like I don't know, like if you're a technical trader, then sure. But imagine if you're like a pure crypto long only kind of guy. Like, what do you actually do now? Yeah, it doesn't work. Like you have to wait for a couple of years, and like we talk to these funds all the time, and they're like, "Well, what are we really supposed to do? Like, are we just supposed to be like diligencing all these assets and then turn into a VC fund? Because like ultimately, if the market stays this way for a couple of years, you really cannot do anything unless you're a technical trader and you can trade different assets or have some other way to kind of get alpha. But a lot of these funds are just like they have been set up over the last like year or something, and all of a sudden they're coming in and they're like, well, what are we supposed to do with this money now? Like we have no way to deploy.
Yeah, the market has phases. Like a lot of traders became like NFT traders a while ago too. So this isn't new. But yeah, I think not trading crypto is the quote unquote cool thing to do now. But like these fundamental firms, when we do get a bull cycle, they'll do well, right? And it's really about, do you want consistent income that fluctuates but not too much, or do you want to hit those home runs? And I won't lie, like probably every VC firm outperformed us in 2021. Well, at least up until November, right? And that's just the way the game is played. If you have those time frames and you see the moon, like you're going to hold for those 1,000x's. And as traders, it's very hard for us to hold for those 1,000x's, and we'll miss it almost all the time. So, over a long enough time frame, you probably get the same return, like the same yearly return over a long enough time frame. It's just that right now they're probably doing nothing, or they're probably losing money while we're still making money. But those roles will reverse as soon as you get like a up cycle again.
How do you guys pick your analysts or your traders? How do you do due diligence on that? Like, how do you make sure they're not just like LARPs? How do you make sure that they're actually capable of trading a market, especially as difficult as it is today?
You can only really base it off the historical results. We always ask for traders, the due diligence is higher because you can't really fake trading, right? So we look at their historical results, what their drawdowns look like. There are a lot of people in this cycle that have made a lot of money, but their drawdowns are insane. And as a firm, you can't really take that. Or you can take that, but you just have to give them less starting capital. And then with new traders, obviously the bankroll that they start with is smaller, and then they build up their performance. And as they perform and say their drawdowns and numbers look good, then we kind of size them up. That's how it works with traders. With analysts, I think analysts are even harder to analyze, for the lack of a better word, right? How can you really, judge their performance? There's no like hard numbers that you can use. So analysts are harder to judge, but we also give them more leeway. At the end of the day, we're still the ones executing all the trades. So with analysts, it's more of a shit show, I think.
How do you make sure that there is no like large drawdown, like you mentioned? Like, it's possible that some trader maybe has a few like smaller drawdowns and then one massive one. So like I almost remember like hearing to Suzu on podcast, and he'd be saying the same exact thing. Like you have to have great risk control. Like you have to really make sure that you don't get wrecked in a volatile market, and then a few months later you see him get wrecked in the same exact way. So how do you do that? Like, is it just kind of like firm-wide risk procedures, training, and controlling actually how the trades are executed?
Yeah, it's just about, for us, it's really just about having that guy who is impartial to who you are, watching your drawdowns. I think that's probably something that Three Arrows might have missed. Or it's also possible that, Sue and Kyle are just such large personalities within the firm that it's, as a risk manager, you can't really control their drawdowns, because at the end of the day, they're the owners, right?
I don't think they had risk management though.
Right.
It was Kyle.
Yeah, it was Kyle, but it wasn't a person, right? I wonder who had that job.
So for us, it would be the same. Like if I were to go on a streak where I would just say fuck you to the risk manager, then the firm can also blow up, right? Because ultimately, I am the firm, and I can overrule the risk manager. So you still have the same issue there. And I think it's really hard to get around that issue. If you, as the owner of the firm, say, I want to put this trade on, there's nothing stopping you. But with other traders, you can manage them.
So this is hopefully, unless we get rugged by the folks over at eGirl Capital, or Larry might rug as well, a monthly series where we have Larry and some of the team over at the eGirl group join us to talk about the market. So I thought it'd be nice to kind of end each episode in the same way, with a overrated, underrated segment where I will say a word or a phrase or a topic, and you will respond with your reasoning why something's overrated or underrated. So let's start with crypto gaming. Overrated or underrated? Can
I give a neither?
Yeah, you definitely can.
Yeah, I think it's gotten to the point where it's neither. People have realized that games are not surefire bets. Games are having hard time raising as well. So I think it's neither now.
Mr. Cermak?
Yeah, I agree. For me, it's probably overrated. But exactly like Hawk said, like there's just so much that goes into development of games, and you can't fix it with Ponzinomics that lasts for a year and a half. Like you have to make the games fun enough to be played without the tokens, and then somehow insert the tokens to help the feasibility of the game or something like that. But you can't do it the opposite way. I think like. Everything will just end exactly the same as Axie Infinity. When you run out of new players, you run out of interest, like it will just all come crashing down, and then the token economics no longer work, and the game just ends up like slowly kind of fading into nothing. So I would say overrated for now, but there's also some cool games that are being developed right now that will take some years, but I'm not bearish on it working out long term, just like the short term ones and the token economics is just in general are not sustainable. And I've seen nothing that has been sustainable so far.
Yeah, I want to butt in and say, like, people really underestimate how much it costs to make like a good game. Even like these mobile games like Pokemon Unite, they might seem really simple, but they cost like 20 to 50 million. And as far as I know, like no crypto gaming project has raised that amount of money, right? So to expect them to make a quality game, not even AAA, like to the quality of like Pokemon Unite, like it's just really unfeasible. But I say it's neither because I'm seeing a lot less gaming projects being funded as a whole. So yeah.
The market's moving in that direction, I guess, is what you're saying.
Yep.
So it's hard to say.
Even these like 2 at 20s are not getting filled because people realize, what can you really do with 2 million? Like, fuck all.
Yeah.
I was going to ask one more, but I don't want to deprive Larry of his super important 9 a.m. meeting that he has.
No, I'm good for like 3 more minutes if you want. Up to you.
Let's go one more.
All right. Well, let me think of something that is interesting. I have on the paper here Aptos, maybe, or DeFi derivatives.
You should say app chains. App chains is a good one.
DeFi derivatives are super overrated still. We get approached all the time to like do market making or trade on these things, and there's zero reason why we ever would. The liquidity is even worse than the shittiest liquidity, ever. Super, super overrated. I don't know who the target audience is really for these things. Like it's probably US-based retail traders. That's your target market.
Or China-based too, could be.
Right. Yeah. But the target market is very, very small. Yeah. They're still overrated because they're still getting funded, in my opinion.
One of the most problems, and I think I identified this like at some point last year as well when the bull market was going on, but like it is a huge fucking problem in my opinion that every single chain has like one of each, like one derivatives platform, one lending platform, one AMM, one order book based platform, and it's like every single one is a new project with a new token that raised X amount of money. Like it's just really, really not sustainable long term. You just don't have that much interest, that much liquidity, and I think like that is really what like ended up taking these tokens down so much. Like most people didn't think maybe they would go this down this much, but because they were not that liquid, the float wasn't that high, and you have a shit ton of them, hundreds if not thousands, and who actually wants to buy them right now? Like literally no one. Literally no one's buying tokens.
And there you have it. Well, I think that's a great place to end. Literally, no one is buying tokens. You hear that, Anon? No one. Well, Larry, Hog, thank you so much for tuning in. Or rather, thanks for being on the show. And to you folks at home, thanks for tuning into The Scoop.
Thanks, Frank.
Thanks.
We'll be back for you again with another great guest. And in a month's time, we'll have Hog and Larry back on to talk about what they're seeing. Until then, have an amazing day. Looking for more great insights from The Block? Check out The Block Research, the premier platform for research content on crypto markets and the digital asset industry. The Block Research membership includes cutting-edge reports, webinars, company maps, and more, available via our dedicated research portal. Visit theblockresearch.com to find out how to join today, or contact a member of our sales team at sales@theblockcrypto.com and let them know that Frank sent you.